All right, boom, 12 o'clock. All right, well, thank you very much for attending LCG's Market Analysis webinar. This is going to be a weekly event that we hold every Monday at 12 o'clock London time. So we've got daylight savings coming up not too far away, but it's going to be 12 o'clock London time regardless. And the idea being that we're going to cover some of the key events for the week coming up. And it's an opportunity for you to ask any questions, throw any ideas around. It's a pretty open forum. I assume most of you had the time to read the risk warning here. It's pretty short, so I'm going to skip through to the... this is basically just a summary of what I think will be key for this week. Classically, I'm just receiving a phone call. Okay, so there is the way I view this week, the way I view most weeks, is that there's some bigger themes that are driving the markets, and there's some specific events which we have to be wary of, both as opportunities and risks in trading. Oh man, the trouble with my phone is I can't put it on divert for some reason. So anyone who's going to hassle me in this webinar, it's going to be a problem. So, Donald Trump's spending plans, Donald Trump's tax plans, obviously they're the things that are driving markets higher at the moment. We don't have too much detail, but nonetheless, the hope of it's driving things higher. European elections. So we've already the question's being asked. Filon to step down. He hasn't yet, but we have heard that his alternative candidate, one of the ex-prime ministers in France, isn't going to step down. Obviously, the Federal Reserve meeting is always an issue every time. It's one of the biggest drivers, particularly of currency markets. The market's pricing about a 90% chance of a rate hike now, and so hence we've seen a bit of dollar strength re-emerge into the market. A lot of the currency pairs, we're going to have a look at the charts in a minute. The charts will be the main basis of this webinar. But a lot of them are in ranges at the moment, so we're looking for breakouts, and if you're judging it on what the Fed's doing, if they are indeed going to hike rates next week, next Wednesday, then really we're looking at dollar strength. Specifically in terms of events this week, House of Lords vote in the UK budget. I'm going to talk about these in a bit more detail as we go through the charts. But we've got a lot of China data. My colleague IPEC has written a report on China. You can check that out. But today it was the interest rate decision. The big one really to my mind is tomorrow when we get the foreign exchange reserves data and trade data, CPI, retail sales, industrial production. They typically all come out in the same week with China. Probably the big event of the week are, well, there's two of them really, but one of is the ECB rate decision, particularly for euro dollar. Maybe the bigger one, dollar yen, is always typically a good one for trading. Non-farm payrolls, also gold. Gold's been pulling back from its recent uptrend. Non-farm payrolls could be the decider as to whether it resumes its uptrend or in fact rolls over into a deeper pullback. And then a fair few earnings today, which I'm not going to cover in great detail, but if you are wondering what's driving the UK and US and European stock markets, these are some of the big ones that can typically push the index. I wouldn't say the earnings define the moves in the index, but they can help it be more up or down on a particular day, particularly if there's some big surprises. So at this point, I'm going to switch gears to the charts. Worth noting that I'm recording this webinar, so if you want to have a quick look at this screen again, it'll be right there in the recording. We'll put it on YouTube. So over to our LCG trader. So the plan here is that I'll cover the three main FX pairs that are traded with LCG, three main indices, and Brent crude and gold. If there's anything else extra you want me to look at, chuck it through into the questions box, and I'll be happy to cover it. Or anything that I'm saying doesn't make sense, or you have a comment on, again, just chuck it in the questions box. So the euro here. Now, I was talking about this potential for dollar strength leading into the higher expectations of a Fed rate hike, and of course the European election factor. Well, I think both of those are playing in at the moment. What we were eyeing up, so this is a 4-hour chart. I'll give it a bit more context in a second, but what we've seen so far today is pretty much a false breakout above these highs. If we'd had a close even above this little this short-term high here, and indeed these highs, that could have been good for a push higher. We didn't get a close. We rolled over on the 4-hour chart, and that big reversal where we started we went that much higher, but the bears completely took over and sent us lower. This is in essence a reversal candlestick pattern here, because it's at resistance, a fake out, and a drop and a close lower, and hence we're following through to the downside. And does that make sense in the context? Yes, because we're in a trading range, where the market drops, makes a high, makes a low, sideways. This is not a range. This is not a trend right now. This is a range, and it's rolling over from the resistance. Obviously, not perfectly at the resistance. That's already happened once, but a little bit above with the close below. This is this is a decent trade setup at the moment, and the market's trending lower. If you're being more cautious, then you trade into the middle of the range. But if you're more confident, depending on your trading strategy, then you look for this to roll over straight to the bottom of the range. And then obviously, which one you choose may depend on which way you think the market's eventually going. My particular take on it is that this 105 level has proved pretty huge, and we got a big push off it on I think it was Thursday last week, and was that Friday? I forget. Is this a little? I think this might be a Sunday candlestick. Is it? Fourth, yeah. So either way, this is a big bullish candlestick pattern off support. So again, this is a kind of bullish trade setup right here, but because it's such a large candle, buying right at the close of this candle was always going to be a risky bet, and you're probably worrying about it if you've done that at the moment. So if you do still have some belief that this bullish engulfing candlestick is going to lead to higher prices, maybe up to the top of this range up here, up towards that 108 point, then you wouldn't be buying on the retracement of this bullish engulfing candlestick. Obviously, if it goes below the lows here, below 105, I think that probably opens up the lows down here, down to the below 104, into the, I think there were 14-year lows that we saw in euro dollar earlier in the year. So this is the setup at the moment. It's a range. It's very difficult to determine what the trend is, but we've had a big bounce off the longer term support, but obviously on that shorter term basis we've had a fake out. So you're looking for longs lower down if you believe in that eventual if that bullish engulfing candlestick, which here you can see on the 4-hour chart, on the daily chart, I think it's going to hold. It's one of those trades where the risk is pretty well defined. But again, 105 being the big line in the sand here for the euro. Fundamentally, what's behind it? Well, today we're seeing the euro roll over a bit because Fillon looks like he's staying in the race for the French presidency. That probably improves the chances for Marine Le Pen. Marine Le Pen has promised a referendum on France leaving the Eurozone. Also, at this weekend, we have the Dutch election. So that's on the 15th, and so some risks there of a populist result. The Netherlands not necessarily a key country to the overall structure of the Eurozone, but it would set the tone for the French elections, which is much more important. And then we have the ECB meeting on Thursday. Now, very unlikely the ECB does anything, and probably more likely, if anything, that they reiterate that they're going to keep their program going of quantitative easing till the end of the year. The risk to that scenario is that they've already hit their inflation target. So the Eurozone yearly CPI is now at 2%. So their target is just under 2%, so officially it's over it. So they're hitting their inflation mandate, so really they don't need to be doing anything anymore. So it's going to take a bit of clever wording from Mario Draghi to tell the market, to signal to the market that they can still keep going with the QE. If he fails to do that, that's a good trigger for the euro going higher. Okay, let's jump ships to the British pound. This is quite a short-term chart. Let me pull us out to the daily for a second. So okay, let's just, best to do a top-down analysis here. So this is what I try and do in those market snapshot videos. Start with a weekly, daily, 4-hour or 1 hour. Here, so obviously a very strong downtrend in the longer term on the pound, but we're basing out potentially. We're consolidating either way. So on this basis, on the longer term basis, still clearly a downtrend. Probably gives more weight to trades to sell the market. Nonetheless, we're getting kind of sideways based on a daily chart. And we've got a potential setup here where, again, this was a strong move up here. The market's pulling back. We've run into the 61.8% fib, and we've had a nice little hammer pattern here on the daily chart. So eyeing up a short-term push to the top side, the logic being that we've run into a kind of daily support potentially, and then we're looking for the short term to show some confirmation of that. And we were looking for a push to the top side. We didn't get it. We rolled over lower. And here the market's sitting on, literally as we speak, it's sitting on that 61.8% fib. So what it does from here probably gives us a pretty good clue about, the direction for cable for the for the rest of the week. If it unwinds this reversal candlestick pattern, I think one of the difficult things about trading is, trading what you see. So you see the reversal candlestick pattern here. This is a potentially bullish setup. If it fails, which it easily can do, it's probably 50-50 in a next trade is always 50-50. Over a longer period of time, I would like to think that these candle patterns show some sort of rate of success, but this time it could easily fail. If it does, that's a sign in itself that the market's weak, because if a bullish reversal pattern fails, the market's showing itself to be weak. You just need to reverse your mindset, start looking for sell opportunities. And if it does give it up, then obviously the next Fibo level, but I would say more importantly just the bottom of this range here, which, given these two lows over here, we're kind of a little gap down and then immediately reversed. I'm saying that this 120.90, which is obviously just shy of 121, is the kind of major support that you'd expect some kind of reaction from. So drivers in terms of the pound, you may have seen our week ahead video where we touched on this a bit, but we've also got a couple of political events this week. Got the House of Lords vote tomorrow. I don't think necessarily that the House of Lords amendment to secure the rights of EU citizens changes the narrative for the pound too much, because either the government just accepts the amendment from the House of Lords and Brexit's going ahead anyway, or it really fights it and there's a few back and forths and eventually the government wins out. Either way, probably Article 50 for Brexit is going to be triggered at the end of March. So either way, Brexit's happening. Doesn't necessarily affect the status of the negotiations, this House of Lord change. Wednesday we've got the budget. It's not normally something that affects the currency market too much, or indeed the UK 100, which we'll look at in a second. More something to affect individual areas of the stock market. There's potentially some change on annuities again, so watch insurers. There's potentially some change on stamp duty, so watch the home builders. They would be two sectors to be potentially moving during the budget if those topics are covered. I think the overall take on this budget, though, is that it's going to be, no major giveaways, and potentially even a couple of tax hikes here and there, with the Chancellor having a fairly, he was a Remainer, having a pretty dim view on the kind of future for the UK economy, so he's looking to stash a bit of money away. So probably not going to be too much giveaways, only maybe the political hot potatoes like social care are probably going to see a bit of extra funding. Over to dollar yen, no significant Japanese data necessarily, and even if there was at the end of the day, it's probably not the main driver of dollar yen. I mean, okay, the Bank of Japan policy of targeting the yield curve, that affected things at one point in time. Until it starts not working, The Bank of Japan policy is just kind of there, I think, and it's you know, you can kind of rely on it not changing really anytime soon. The main thing is what's happening to US yields, and obviously that depends on what the Fed's go out to do. So, you know, the Fed say they're going to hike interest rates going up, bond yields will track the interest rates, bond prices come down, the dollar increases when people want to get higher interest rates by holding their money in dollars. Simple currency market stuff, right? So looks pretty likely the Fed's going to go. We've got non-farm payrolls on Friday. That's the big beast this week. Our take, and again, bit of a repeat from the weekend video, but we think probably, I mean, it's, you know, you're obviously throwing a dart on the dartboard to try and guess what the actual number from non-farm payrolls would be, but our take is that overall, if you get a print above 150,000, you know, then still the rate hikes pretty much a shoo-in, because we're reaching full employment in the US anyway, so the number of jobs created has to gradually tick down. Last time it's quite a big number, 227,000 I think. This time it's supposed to be about 187, I believe, something in that vicinity. Best to check the LCG calendar for proof of that. Let's see if I can actually pull the LCG calendar up. For those of you who haven't checked this out on the page, obviously there's some other calendars that you can see on the web, but I found ours to be pretty reliable. So get rid of that. So next week, oh no, this week. What am I doing next? On the 10th. Got the UK data early on, and there we go. Non-farm payrolls. It's dipped a bit. I think the average was 187. That's 180. Obviously depends on which economist you're polling. 227 last time, as I said. So probably going to be a bit of a dip. Potential for an upside surprise because the expectation's fairly low. But even if it does miss to the downside, I think, you know, you probably see a swift sell-off in the dollar if it missed. You know, standard. But I think, you know, that could end up being an opportunity if it's not a massive miss. People will be looking to buy a sell-off in the dollar in expectation that the Fed raise rates next Wednesday. But in terms of this this dollar-yen chart, you know, basically at the moment we've got a declining trend line here, and we're pulling away from the trend line. So again, if that's holding as resistance, so there's two things here. We were in a correction. We've failed to make a lower low here, so we've turned it into a sideways range. This potentially is setting up for a reversal, because first you fail to make a new low, you know, then you break to the top side. That's almost like a double bottom there. So we potentially are looking at a reversal. But at the moment we've failed at that declining trend line, so I'd say the immediate potential is for a break lower, and just like in the euro, which is dropping, faked out to the top side and rolling over, dollar yen, it's faked out to the bottom side and is pushing higher at the moment. So, you know, that trend line here, as you can see it, a good initial trade, but we haven't been able to quite take it down lower and watch any kind of break to the downside yet. In terms of share markets, so again, I think my general take, given the ridiculous bullishness of equity markets at the moment, pretty much, you know, unless you're really looking to hold it for the next few months, even years, looking for the big sell-off in the equity market. If you're looking for short-term trades of, you know, a few hours, few days, it's very risky to look for sells at the moment. You know, you really want to be looking for buying opportunities, in my opinion, given the trend of the market. Again, it entirely depends on your own risk tolerance and your time frame that you're working with. But for given the trend is so clearly higher, you know, that just the chances are on your side if you're buying the market. So with that said, you know, we've had a bounce off the 50-day moving average. We've had a break of this resistance here. In fact, we've made new all-time highs in the UK 100, and we're in the midst of a sort of second day of pullback. So that same kind of logic where we're looking for some opportunity of that pullback. This is the old record high that we bounced off, pulled back again. So I think if we get a pushback above that high again around the 7363 area, that's some confirmation that the market's ending this little correction and making another run for records. And this is the Wall Street chart, zoomed in a bit further. So again, generally same idea, right? Very strong uptrend, certainly due a pullback to the 20-period moving average, and indeed the 50. But you can't necessarily hang around and wait for it. If you've been waiting for a pullback to the 20-period moving average throughout this area, then you haven't had too many opportunities. You have to judge the volatility of the market. At the moment, it's strongly pushing higher. That said, we've had a few days lower, but again, the trend is higher. We're looking for buying opportunities. If we drop down to the 1 hour chart, we've had a break of a resistance here, a kind of bullish engulfing candlestick here. Obviously, it's not doesn't cover the low of the day, but it does cover the body. Breaks to the top side above that short-term moving average on the hourly chart. We've pulled back, so resistance at the moment has become support. Now, we're looking maybe for this this little resistance to break again to the top side, and maybe some evidence that this pullback has ended. Very much the same story, the Germany 30. One general rule of thumb worth noting, by the way, is look for the best opportunities in these equity markets, but they generally move in tandem. So if you're going long the UK 100, Wall Street, and Germany 30 all at the same time, you're basically taking one trade that's 3 times as big. So choose the one that has the best opportunity, but probably just stick with the one. That's my take on it. Unless you're going in opposite directions, you're going for a little short-term sell-off in one and holding on for a longer-term trade, buying in the other, something like that. then it makes a bit more sense. But the trend is higher. That was the last little resistance here at the sort of 1255 area. So looking for some sign that the market's ended this little pullback and pushing again to the top side. With the Germany 30, we're still below those record highs. I've got it up here. It's about 12,409, I believe, is the number we have on our charts. Worth drawing that in just from the weekly chart here, because it looks like we're moving higher to test that. But there's bound to be some sort of reaction in that area. Either we come a bit short of it, we push a bit higher and fail, or just right on it. But one of those combinations is pretty likely to happen. Because it's been a while since we've been there. When was this? 2015, April 2015. So yeah, a couple of years since we've been at new records in Germany. Over to the crude market. The fundamentals here are, basically is OPEC complying with the cuts that they agreed. And how much oil is being produced in the US. At the moment, there's record stockpiles of US crude, and that's kind of still having the market a little bit worried about a supply glut, even though nations like Saudi Arabia, the other OPEC nations, and Russia indeed are cutting output. It's not clear yet that the demand is overwhelming supply in the oil market to allow us a breakout of basically a triangle pattern that's happening in the Brent crude price at the moment. We've got a little sign of a break to the downside there, but we've had on the daily chart, we've pushed off that. I would be wary. We're running into these a confluence of these daily moving averages. If we then take this low out, we're also taking out the rising trend line of the triangle pattern. That could bring with it some sort of opportunity. What I tend to do is something along these lines. Oh, that didn't quite work as I planned. What you kind of want to do here is delete that. Measure this distance. What you can do is something like this. Another one to do, just draw your trend line in here. and then just project it to the downside. So wherever the breakout happens, maybe from here. If this triangle breaks to the downside, wouldn't be surprised to see a drop down in here. Lo and behold, it's a pretty nice confluence with where we broke out from this previous high here. So, and indeed, it's $50. So, again, if we see a takeout from the last couple of days' lows in oil, that could be a sizable opportunity of a sell-off down towards sort of $51. So watch out for that. We're just coming into the last couple of minutes of the webinar here, so any questions at all, certainly feel free to shoot them through now. But I'm just going to cover gold lastly. Gold, so as I mentioned, we've been in a tidy little uptrend since the start of the year. This is the daily candle chart. Obviously, we've been hugging this 20-period moving average pretty nicely, but as of last week, we dropped below it. It's still in a kind of positive trend what's the word I'm looking? Alignment, because the 20 is above the 50 easily. So still probably looking for the market to eventually turn higher, but aware that this looks a bit like there's going to be a deeper correction. There was quite a nice reversal on Friday, so we're kind of testing that pattern at the moment. I'm a little bit worried that this quite nice hammer pattern on this chart, maybe if I zoom in a bit you can see it better, sort of hammer doji type pattern there. It's quite a nice reversal off the support. So we certainly could push to the top side again, and again, just trade what you see. Here's the short-term resistance to that push to the top side. If we get a close above there, quite a good chance we push again and this correction's over. I suspect maybe this support's about to give way, and if it does, then then you probably got to start looking to the next areas of support, probably in and around the 50-period moving average. So could be these peaks here in combination with this. I mean, this is quite a nice little pivot area that the gold market's been working from. But given that we got quite close to that anyway, could be something along here, or indeed the 50, before maybe the market zones another opportunity for a topside break. Again, what's the issue with gold? Well, it's probably going to come down to ultimately what do people think the Fed's going to do. Looks like they're going to hike in March, based on all the chatter. Non-farm payrolls is probably the only thing that can stop it. If non-farm payrolls comes in strong, or as we said, probably just above 150,000, maybe gold is going to roll over. I mean, it's well due a correction, so that would certainly make a lot of sense. For a drop down to the 50, as I said, or maybe even, this whole move unwinds to a much bigger degree, in which case, you want to start, what am I looking at here? Trying to find, okay. Otherwise, I've got way too many lines here. But, maybe down at the low here, because that comes pretty close to the 61.8% fib. So again, maybe an opportunity here in gold is a bullish reversal. If it fails, maybe it drops to the 50. If that gives way, then we could be looking at a much bigger correction in the gold market. Let's see what NFP is, and then let's see what the Fed has to say. So we went a little bit over. I know it's supposed to be 20 minutes, but I hope that was useful. We're going to end things here, but thank you very much for attending. Any questions, feedback, certainly send them through to our customer services team, and we'll be happy to help. All right, thank you guys. Good luck trading. Jasper signing out.